So, good morning, everyone. Thank you so much for joining in. So, today's agenda is once again we'll look at one case, and today's case is a very interesting and contemporary case regarding M&A of an AI startup, right? So that's what we'll be doing it. So what I'm going to do is in next 20 minutes, initial couple of minutes, I'll give my introduction and we'll set the context very quickly, and then we will directly jump to today's case. So that will be the agenda. Okay. So let me share my screen first. Yeah. So I think it should be coming up. Yeah, it has come out. So just to introduce myself, so my name is Alok Shrivastava, and I am Bangalore alumnus, and then I worked in industry. My last company was PwC, and then around 7 8 years back, I started goCrackIt, wherein I have personally mentored more than 5,000 students and working professionals, and would have done 150 workshops, right? So that's what I've been doing for last 7 8 years. What I'm going to do today is I'm going to share some of my experiences, and today we'll focus more on case studies. So a very quick background on what is a case. So a case, as you know, is a business problem or a business situation by the uh, given by the interviewer to you, and you have to think about that problem and you have to solve that problem. So that's a case. Generally, case is an open-ended statement. So recruiter will give you a very open-ended statement like my company is losing profitability. What should I do? Right? A very open-ended, and it would be generally kind of inspired by real world situation, right? So that would be that's the kind of structure of cases you might expect in a case interview, right? Why people are asking interviewers are asking case studies? Because a problem solving skills are very important, and in the world where everything is changing very fast, right? The technology, the macroeconomy, the microeconomy, and everything, consumers and competitions, right? It is very important to know how to solve a problem, specifically when there is uncertain situation. So that's why cases are asked to see how will you approach an uncertain situation or a problem, right? Generally, they are evaluating your problem solving skills, and there are a lot of other nuances of problem solving skills which you might will talk about during the case. Your tolerance for ambiguity, how tolerant you are for the ambiguous situation, how are you able to structure that situation when there's an ambiguity, and your communication skills specifically that ambiguity. So these are some of the things you will expect to get evaluated in a case interview. A case can be from any industry or any domain, right? Because they are designed to measure your problem solving skills and not your domain knowledge. So do not worry if you get a case from an industry or domain which is totally different from what you know, because it's not about the industry or domain, it's about how do you behave in a uncertain situation. So ask questions, understand your understanding, try to understand your doubts about the industry and domain, and hence try to solve the problem for first principle. So that's about what you should know about a case, and then we'll directly jump to now a case. So this is a case which is an M&A case, mergers and acquisition case, where the case is that your client is an Indian e-commerce platform. Okay, and it is looking to acquire an AI-focused startup. So it's a very typical situation you'll get nowadays, where there's an e-commerce company and it wants to acquire some AI-based company. You have to understand and suggest whether to acquire this startup or not. So that's the output of this case, which is expected from you. What will you do? So, for a case, and specifically what interviewers are expecting you to do, is you solve these cases step by step, and most importantly, don't jump to solve the problem. Just take a step back, and first step is ensure that you have understood the problem clearly. Ensure that you have asked some clarifying questions about the problem statement itself. Okay, so that's what you are doing. So this is a framework which we will be keep talking about. The first step is clarification. You need to clarify in order to make improve your understanding about the problem statement itself. The first thing what you should do is, even before clarifying, I mean, take a step back and paraphrase the problem. Make sure that you have heard the problem clearly, because a lot of time what happens, candidates hear the wrong problem and this hence they solve the wrong problem. So just paraphrase your understanding. Okay, what I understood is there is a e-commerce company which is exploring whether it should acquire an AI startup or not. Is it a correct understanding, right? Or did I miss anything? Right? To just paraphrase the problem statement. So you paraphrase the problem that there's an e-commerce company which is exploring whether it should acquire an AI startup or not. That's the paraphrasing. Then you ask some clarifying question. Now, what could be some good clarifying question? In this case, could be one, know more about the company itself, the e-commerce company, know more about the target company, the AI startup company. Okay, so to understand our own e-commerce company, our own client, you can ask, what are our products? What is our target market? Right now, what is our revenue? Is it growing? What is our profitability? Just to know the context about where do we sell, how do we sell, right? Just to know more context about our company. And the same thing you should do for AI startup. What is this product company? What does it do? What is its product? What is its target market? What is its revenue? What is its growth and profitability and everything? Right? You just want to know more about this company. And then the most important question is, what is the objective of this acquisition? Why do we really want to acquire this company? Why do you think, what metrics will it help you to improve if you acquire this company? So that's the kind of clarification question you'll ask. You might get some clarification questions answers. For example, that client is a pan-India e-commerce company. And the AI startup company, which we are trying to acquire, which has a product which automates customer service process of its clients using AI and provide better insights which lead to better customer experience. So that's about this company. So this is an AI company which we want to acquire. It provides AI product which helps you to automate clients to automate client service process, which in turn improve the customer experience. So that's about it, about this client. Now what will you do? Right? So now you got the clarity. One more step I would do before you structure your thoughts or structure your framework. You make sure that you have understood the objective of this case very clearly from the recruiter. You make sure that you have understood clearly that what this recruiter want you to do. Okay, so you ask one more objective setting question that, okay, you want me to evaluate whether we should acquire this company or not, or do you also want me to do the evaluation of this company, or is there any other objectives as well, right? So just understand specifically what you're required to do, very pinpointedly what you are expected to do in this case study. So you set the objective. So now you clarified the objective, you set the objective. Now you know what you need to do. In order to evaluate whether to acquire this AI startup company or not, what framework will you use? What structure will you use? What approach will you take? This is a very, very important point in a case, that you come up with a structured approach, a framework or a structured approach. It could be a ready-made framework, or it could be just a first principle thinking framework. Okay, these are the 5 things I will look at, or these are the 3 things will I look at to evaluate this opportunity. So you come up with a framework, and that framework, there's no one framework I would say that you should use. You can use your framework depending upon the problem statement, but that should be structured. So in this case, what framework I am using is this: strategic fit, financial attractiveness, risk, and organizational and cultural fit. What do I mean by that? That I would look at these 4 buckets to understand whether to acquire this company or not. And these are the 4 major pillars of my frameworks. First pillar is strategic fit. What do I mean by that? Is strategically we should know what do we want to do with this acquisition. What problem are we trying to solve? Is it cost? Is it revenue? Is it ratings? Do we build this system or acquire? Why do we acquire this company? Why can't we build this system? Which process or use cases we will be using this system for, right? So what is the business objective? Why don't we make this software on our own? Which process, which use cases will be used? So you should have a strategic clarity, a process clarity, a business clarity about why do you really want to acquire this company, right? Then financial attractiveness. Ultimately, will it help me to improve my financials in some sense? Will it help me to improve my revenue, or will it help me in reducing my cost, or will it help me in improving my customer experience, which in turn will improve customer loyalty, repeat order, NPS, and etc. How it will help me and how I can quantify that financially is a very important question you will do. Risk, very important. Any proposal, business proposal, any acquisition proposal, any business proposal, you should evaluate risk. What are the potential risks of this acquisition and how do we mitigate those risks, right? And organization and cultural fit. I mean, this is a softer part of an acquisition that when you acquire a company and let's say hundreds of people are joining it, will they be culturally compatible with your company? Because they are coming from a startup culture and your company is, let's say, a very big structured company. So will they be compatible? Will they be able to perform the way they are performing in the startup? Right? So these are some of the important buckets I would like to evaluate before deciding whether to whether to acquire this company or not. So with this, what we are doing till now is we're trying to structure the problem, clarifying, we're trying to make sense of uncertain situation, right? We're trying to make sense of uncertain situation. We are trying to structure this problem. Now, what we should do, our recruiter would like us to do is analysis. They might give us some data. Some recruiter may stop here and say, okay, I understood. You can structure the thing. It's okay. Some recruiter will give you data or fact to analyze and make sense of that data or make sense of that analysis. So let's see. Let's start with a very quick data calculation. So let's say the revenue of our e-commerce company is 5,000 crore and the customer service cost is 1% of the revenue, which is a typical for large e-commerce company. And let's say this AI company, if we acquire this AI product, which we acquire, it will help us automate 30 to 40% of the tickets, chat, FAQs, some simple issues. So let's say with the acquisition of this company, we can we can automate 30 to 40% of our processes or tickets. So what will be the annual cost saving by using this AI technology? Let's calculate that. So total annual revenue is 5,000 crores, which is given. Customer service cost is 1% of the revenue, which is also given. We calculate what is the current customer service cost, which is 5,000 ka 1%, 50 crore. That is the step one, that we calculated the current customer support cost. Second, what is the AI impact? So let's say we know that in the given problem, AI is typically improving 30 to 40% of the tickets, okay, or automating 30 to 40% of the ticket. So it is improving the productivity. And what is the value of that productivity? So let's say the value of that productivity, the process which it is improving is, let's say, 30%. So 30% of the 50 crore means 15 crore. The cost which is being addressed by AI, which will get automated by AI, and that cost will be around 15 crore. We use some net realization saving. Maybe we say okay, maybe not the entire 15 crore will get reduced. Let's say 70% of that will get reduced. So net cost saving, net realized cost saving is almost 10.5 crore. So that's the saving you are getting of 1 year in 1 year when you are using this AI. Okay. Now the next question, which is, if I am able to save 10.5 crore per year, if I am able to save 10.5 crore per year, what is the valuation of this company? How I value this company? How much should I pay to acquire this company? That's the next question we should know. So let's see. So till now we know that we will be able to save almost 10.5 crore per year if we use this AI product. So how will you value this AI startup given that you have a saving of 10.5 crore per year rupees? Let's see. So our logic of valuation will be that the value should be derived from the fact that what is the present value of cost saving created. So that's a concept you should know, that what is present value. Present value is nothing but the present value of my future cash flow. So let's say tomorrow, let's say next year, 100 rupees. What is the value of that tomorrow, that next year's 100 rupees today? It's called present value. Or let's say I am getting 500 rupees after 3 years. What is the present value of that 500 rupees today? is what it is called present value. So we need to know what is the present value of cost saving created in next 3 to 5 years. Okay, and that will be my valuation logic. So let's see. Since the startup is being acquired only for internal use, we are using it only for internally. Okay, we are not using it for external approach. So the right approach is that value the startup based on incremental cost saving it generates for the parent. So we already know. So step one, identify cash flow to value, meaning we have 10.5 crore as annual cost saving, which is directly going to my profits, right? If I am saving 10.5 crore, it will increase my profit by 10.5 crore. So what is my actual saving? If I use a tax rate of 20%, because I have to give some tax on this, so my actual saving will be 10.5 into 1 minus 20%. So my actual saving per year is 8.4 crore, right? After tax, I am saving 8.4 crore, because although I am saving 10.5 crore, but a portion of it, 20%, I am going into government as tax, right? So my post-tax savings are 8.4 crore. Why I am doing all these things? I am ultimately trying to value this company. I want to value this company. So first thing which I did, and my logic of valuing this company is that whatever saving I am getting in future, I need to take a present value of that. Okay, that's the logic I am using. So first thing I decided, I calculated that I have per year rate saving of 8.4 crore. Now the step two is choose the valuation method. Let's say we choose only one method, which is very common, I would say, perpetuity method. What is a perpetuity method? That whatever cost saving is having, I will assume it is having for a perpetuity, and there is a formula I'll be using. What is that formula? That formula you should know, or you should just remember for now, that the value of my future cash flows for perpetuity is CF divided by R minus G, right? Where R is something called hurdle rate and G is something called growth rate. That's a formula you should know. Don't worry if you don't know, just read about this, but that's the formula you need to know. And why I'm doing it, I am trying to calculate the present value of all the savings for perpetuity, for entirety, for future, for infinite future, right? So the saving, hence the value is 8.4 divided by 20%, which is my hurdle rate or a discount rate, minus growth, which is 5%. So 8.4 divided by 15%. So almost 56% is what I'm getting. So my current value of all the cost savings because of this AI for perpetuity is 55 crore or 56 crore. So that is one thing I need to definitely take into consideration when I am talking about my valuation of my future cash flows or future cost saving in this case. Okay. Now, there's another important thing I need to also understand, that there is some strategic value I'm also getting. So I'm not just getting this AI, and it is not just reducing my costs, but it is also improving my customer experience, because of which it might improve my revenue uplift, because people will get retained, the customer will get retained, and hence my lifetime value of that customer will increase. So I'm not just getting cost saving, but I'm also getting customer experience, because of which I'm getting good talent and IP, because of which I'm getting revenue uplift, maybe because of which I can develop some other AIs, and hence improve my customer value more and more. I can retain more revenue. I can get more referrals, for example, if my customer service is good. So it's not just 56 crore, which I calculated earlier. It's not just cost saving, but also there is a premium, because I know because of all these things, my customer experience and hence my lifetime value, long-term value of customers, my revenue, my referral revenue will increase because of my better customer experience. So what will be that? I don't know that. Maybe I can take one rough number, some 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 rough number. So let's say I'm assuming that it is 2 to 3 times or 4 times annual saving of what it is incurring. So my annual saving was 10.5, or I can take 8.5 also, the one which I calculated is earlier, 8.4, any value, which is just an approximate value anyways. And it is 2 times. So my premium value because of this thing is around, let's say, 21 crore. So my total valuation is 56 crore because of my cost saving, and plus 21 crore because of my strategic premium, and 77 crore is the maximum I should give to this This is the maximum I can get out of this acquisition, is what it is saying. Okay. So my valuation will be either equal to or less than this 77 crore. That's the idea you should know about this valuation. So that's how you calculate the valuation in M&A, any M&A case. What we did, just to revise, we calculated the annual saving, which is 10.4 crore, 5 crore pre-tax. Post-tax, it was 8.4 crore. Now, in order to value my company, my logic was that I will take present value of the total cost saving created for perpetuity. My per year saving was 8.4 crore. For perpetuity, I used this formula. Value is equal to CF divided by R minus G. CF is nothing but your cash flow, additional cash flow, which is 8.4 in our case. R is nothing but discount rate, which is 24%. Let's say in our case, we have assumed these numbers. Okay. But discount rate is 20%. And let's say growth in saving is every year I'm saving 5%. Okay. So total is your 8.4 divided by 20 minus 5, which is almost 56% growth. And then I also added strategic premium, wherein I thought, or I assumed, or the logic is that because of better customer experience, I'll have better growth in revenue, right? And hence, I'm giving a premium to this particular acquisition. So which is, let's say, 2 times of the annual saving, which is 10.5 or 8.4. You can take any one value to 21 crore, and hence your valuation is 77 crore. Maximum is what value you're getting out of this acquisition. So that becomes your basis for valuing the acquisition cost of this particular target company. The last step is, so what we have done, we have paraphrased, we have clarified, we have set the objective, we have given a structure to solve. The structure was this. If you remember, yeah, this was the structure: strategic fit, financial attractiveness, risk, and organizational and cultural fit is the structure we have given to see the buckets. What are the buckets we are going to evaluate? Then we did a calculation of the valuation, which came out to be maximum as 77 crore. Now what we need to do, we just have to recommend our recommendation. So our recommendation could be, possible actionable recommendation could be, do the acquisition with a valuation which is less than INR 77 crore. Proceed only if we have done the technology due diligence. That technology is actually giving the result which you're envisaging, and you're able to integrate it with your system. I mean, the technology should be not such that it is impossible to technically integrate with your existing technology platform. You need to ensure that revenue upside is long term, which is clearly proven with quantified impact on repeat purchase. So you should, because you're giving some premium, assuming that you'll also have a better retention and all those things. So you need to do a due diligence of that also, that if your customer experience improve, your customer cost reduce, customer service costs reduce, you are able to retain the customer better, you are able to make the customer service better, and because of that, additional revenue will be generated. To just do a due diligence of that also, and also ensure that you are culturally integrated. A bigger problem in a softer cultural problem is in the integration or in the acquisition is that when you acquire a company and their employee comes and they are coming from a startup culture, while your company is big company, there will be a lot of cultural shock, there will be a lot of cultural integration issues. So you have to ensure that the company which you're acquiring and its employees, they are able to work, they are able to culturally integrate in your company and hence perform better in your company. Some company will also hence retain the founders at least logged in for at least a couple of years. I mean, they cannot, they have to work in this company for at least 2-3 years before, if they want to leave, they can leave. So these are some of the things you do to ensure the cultural integration. So this is how you recommend your final recommendation. Just to summarize, listen to the problem clearly, paraphrase your understanding. Do not jump to solve the problem. Show the structure, show the framework. Take interviewers' hints. A lot of time you're stuck. Don't listen to the interviewer. Interviewer will give you a lot of hints in order to guide you towards the right direction. It is okay to get stuck, but do not give up. That's a very important thing in any case. Some action item in terms of what you should do for getting better in case studies. Read the McKinsey way. Right, this is a link we have given. Understand some key frameworks. Although You may or may not directly use these frameworks, but it is great to know these frameworks: profitability framework, industry structure, cost structure, market entry, etc. Okay. For guesstimates, at least, which I have covered in the guesstimate section, in sessions, no macro numbers: population, interest penetration, literacy rate, income distribution. Form a group of 2 to 3 professionals or students and start practicing as early as possible. In order to get better in any case interview, you have to do a lot of practice, not just read the case, but do practice with someone so that you know how to solve a case, right? And there are some more resources. If you need any help in terms of one-to-one mentoring, if you want to have career guidance, resume reviews, mock interviews, you can just scan this. You can take a mentoring session with anyone, any industry mentor from your domain or from your target domain, right? You can always go. We have done more than 60,000 one-to-one mentoring sessions and saw great results, right? So you may also want to get help on that. You can also take some of our courses which are there, which is listed here. You can take our guesstimate course, you can take our consulting course, or you can take a customer and consulting bundle, right? Wherein you can learn more about cases, right, and guesstimates. So that's what I wanted to share. Thank you so much. You can follow me on LinkedIn. We can connect on LinkedIn, and uh, do reach out to us if you have any doubt. Thank you so much.